We're at Georgetown University for the McDonough School of Business Real Estate Summit. Joining me is Bob Steers, co-chairman and co-CEO of Cohen and Steers. Bob, can you tell me what you see as the appetite for IPOs in the U.S. right now?
Well, I think first off, there's a large pipeline of potential REIT IPOs, and I think the appetite will vary widely depending on the property type, the management team, and the valuation.
And there was a lot of news earlier this year about the blind pool REITs. Do you think we're going to see more of these type of offerings this year?
I really don't expect to see a lot more blind pool activity. The issues there range from lack of track record, lack of identifiable assets to make projections on, to management teams that lack track records as well. So I think it would be possible for additional blind pools to get done, but only if it's a property type that is currently underrepresented in the marketplace, could be industrial, for example, and only if the current management team already has extensive experience in the public market at some previous time.
What is your outlook for equity offerings in the international markets? Are there any regions where you're seeing strong opportunities?
We do see opportunities in Asia. There is a pipeline there. IPOs, spin-outs, most recently or currently Swire is spinning out their property division. And it's a quality portfolio with a strong management team, but it does come down to valuation. As you know, prices in Asia have not suffered the way they have in North America and Europe. But there will be significant and is significant activity in Asia. Europe is much more muted. I think it will take a while for market conditions to settle out there before we see a lot of IPO activity in Europe.
M&A activity here in the U.S. hasn't reached the pitch that many people expected. Why not? And do you think that we'll start to see deals pick up?
We really don't expect activity to pick up because of the very successful recapitalization of the industry and virtually unlimited access to additional liquidity. We don't see the catalyst for consolidation. What we do see is the bottlenecks in the private arena, again, which will fuel the interest in IPOs, and that will be the reverse of the trend we saw just prior to the peak of real estate prices of the U.S. REIT industry consolidating, going public to private and shrinking. And again, we think we're at the beginning of a multi-year period where the opposite will hold true.
And you mentioned public versus private. In the current market, what do you see as the main advantages for investing in public real estate versus the private side?
Well, we think there's a broad range of advantages, clearly. What you've seen for the last 10 and 20-year time periods is that the returns from public listed real estate companies have far outstripped core opportunistic value-added returns, and that's with the benefit of liquidity. So we believe that the return advantage, the liquidity advantage that REITs have demonstrated now for 2 decades is compelling.
Thanks, Bob. For REIT.com, I'm Matt Bichardt.